So Mike, it is unusual for a Canadian-based company to be operating in Australia. Why hasn't Pegmont gotten any focus over the last 20 years before Vendetta Mining?
We felt we had a competitive advantage. My business partner, Peter Valgaris, was familiar with that area. And Pegmont was originally thought to be a lead-dominant system. I don't think they really had a thorough understanding of the ore body that perhaps we did. Now, since then, we've done a significant amount of drilling, and I think our theory's been proven up. We've taken the ore body from 5 million historically to the point now where we're close to 13 million tons inferred and indicated. As we've drilled down dip, or deeper if you will, the zinc grade has increased to sort of a more one-to-one level. But I think the key thing that we've done is we've demonstrated there's a significant open pit component to it. Within that resource, the open pit shells are currently at around 8 million tons, and we'll see those hopefully increase as we've done further drilling this year that's not included in that resource.
Well, the drill program you have currently started in May of 2017.
Correct.
What's left to drill in the program?
Well, we've got actually quite a bit of drilling left to do, mainly on the open pit shells, but we are going to drill from an exploration point of view. We're going to test that copper target that we hit at the end of last year. It's a separate mineralizing system, and we put one drill hole into it, hit 3 meters of copper at 3% and half a gram of gold, it was significant grade. We'll be drilling within the next couple of weeks on that, and that'll indicate whether we've got a second discovery. But beyond that, we'll be mainly doing development drilling on Pegmont. Beyond that, we will be doing a new resource calculation in January, February, just prior to the PDAC.
Great. Now, when do you expect to finish the option agreement to acquire 100% of the property?
So we've got a $500,000 payment in February, and a $1 million payment November of 2018, and then an advance royalty payment of $3 million, and then it's ours 100%.
Right. Well, now let's talk about Zijin Mining and Solitario's interest in the company. They own, 8% and 5% respectively?
Correct. Zijin, we just recently positioned in the company. They have a 5% ownership currently, and they had approached us to see if we could position them. We were able to do it, and they're one of China's largest mining companies. And I think it sort of speaks to the technical success we've had at Pegmont, and as we take it to another level, hopefully they're a good partner to have working with us. And same with Solitario. And RCF, Resource Capital Fund out of Denver, has still maintained a 16% ownership. So all well-known groups within the mining space.
Now, the last resource update released earlier this year. Can you provide details about it?
Yeah, we went ostensibly from 5 million tons to close to 13 million tons. And
so over double.
I think just as important, the majority of that is hosted within open pit shells, so which changes the economics dramatically. The goal would be to get over 10 million tons in the open pit, or close to it, and 5 million underground. And I think by doing that, what we've done is we would have largely de-risked the project. From an economic point of view, the open pit is certainly a lot easier to put into production and a lot easier, lot less capital than going underground, within the first 5 years.
Well, speaking of capital, how much cash does the company have now?
We currently have $2 million in our treasury. We have had a lot of our warrants exercised, though. I think about half. We've got a significant amount of warrants that I expect to come into. They are in the money now, and that'll give us enough money to make the commitments we've got to the vendor next year to get 100% of the project, and B, to advance the project further.
So do you expect zinc price, the strength, to continue?
Yes and no. I think short term, the treatment charges and refining costs, which to me are the proverbial canary in the coal mine, are at almost historic lows, so that indicates that there's a crunch at the smelter level, which is good for the mining companies. But having said that, if you look at lead zinc historically, it tends to have these dramatic moves, stays there for a while, and then slides back, sometimes in dramatic fashion. What we've tried to do to insulate ourselves from that, we model everything using sort of 90-cent lead and 95-cent zinc. So we know what the economics of the ore body can stress test down to those levels. But there will be a second leg when that pullback comes that we maybe haven't seen historically. I think the sustaining price of lead zinc is going to be higher than we've seen previously, which when people realize that, I think that'll lead itself maybe into a further zinc market.
Right.
So, but we haven't seen the valuations equate with the mining companies because of the higher zinc price. I think that might still be to come. We kind of have our foot on the gas to take advantage of these higher zinc prices and lead, because you don't know how long they're going to stay up there. So we would like to get as much done and as we can.
To take advantage of it.
Exactly.
For sure. Well, lastly, let's talk about some next catalysts for Vendetta Mining.
Over the next 90 days, you're going to see further drilling, both on the open pit shells. We'll test that copper target we talked about earlier. But you're going to see an updated resource prior to PDAC, I would think the end of January, beginning of February. Further metallurgical work. And then we're also doing some geotechnical work and environmental impact studies. So there will be significant news flow coming out. We expect to look at a PEA in probably Q3, Q4. We would have done one sooner, but fortuitously, results so far that we've put out have all been very good and have increased the size of the open pit shells, and we're finding more ore. So we don't want to go to our PEA until we're happy that the amount of ore that we're demonstrating is what we're going to go to the market with.
Right. Well, thank you so much for all the insights here.
You're welcome. Thank you.